All right. It's 12 o'clock, and this is Taking Stock live on our YouTube channel. I'm joined by Johnny Boy. You all right, Johnny?
Morning. How you doing?
State of the markets this morning. What would you say in one word? Keep it clean.
Yuck.
Okay. Yeah. Well, the thing is, I don't know what happened there. The market started off earlier, and they started to sort of look a bit okay. They were starting to rally a little bit. You know, there's a bit of green on the screen, but then they've all tumbled a little bit, and it's on this. It's on this. I think it's. I can see it is the PMI stuff which we're looking at. By all means, do us a favor. If you're listening the first time, hit that subscribe button, like, share. That way more people will find us and more people enjoy it or not enjoy it, whatever. But rise this morning, a couple of on the FTSE. It's a big miner there. Antofagasta, Anglo-American. So what about the fallers then? Rentokil, Diploma, Smith and Nephew, all that stuff. But it's all down pretty much. Look at the FTSE is the worst actually. Down, 0.41%. AIM all share 0.23%. So it's not looking that pleasant. But
yeah, I think a lot of the moves at the moment are being driven by ex-div as well. I couldn't say for sure because I haven't looked at them. Okay, but I know that some big moves last week where companies going ex-dividend.
Yeah, ex-dividend. So I'm always trying to put a positive spin on it because you can't be negative all the time because otherwise you wouldn't get out of bed because there's so much negativity about. So the only thing I can think of is why the market's rolled over a bit is on these purchasing managers in manufacturing numbers came out today for the UK. Now, below 50 is contraction. That means it's slowing. The growth is slowing there. And so it came in at 44.3. It was forecast to go in at 44.2. So just, a little beat there. But previously it was 43. It's gone from 43 last month to 44.3. And this is a slowdown still, of course. But in my mind, this is fine. This is what the Bank of England want. They want this. Lack of demand through manufacturing makes a softening in prices, makes inflation doesn't go up. That means they'll stay where they are on interest rates, even lower them. I'm also thinking as well, September, October, not particularly strong months for the markets, but November and December are. Now, if we kept getting these figures that are quite weak going to the end of the year, I think we're on for a good rally because come next year, there's only one way interest rates are going. And so I'm saying it is bearish, and I've been saying for a long time, but I think it's, these are the figures we need to see, contracting, slowing down, and that will stop central banks from raising further. That's what I'm thinking, Johnny. That's my
I think, yes, they won't raise further, but are they likely to fall anytime? Are they likely to cut anytime soon? I think the answer to that is it's probably not for a while. Yeah, there's a lot of inflationary pressure to wash out the system still. It's
but I don't think we need to see as long as we realise the message, the tone coming from the Bank of England is such that they're saying it's inflation is coming down. We are beating the back of it, or whatever, cracking the back of it, whatever. I think it will be okay. Let's be honest. FTSE hasn't done too badly actually. It's international indices. I mean, look at that. It's not really given away at all.
Well, no, but I mean, the FTSE 100 has been propped up with, the sort of the energy crisis has obviously been very, very helpful for the likes of BP and Shell, which make up a big chunk of the index. Power producers have done very well. Often very large companies, banks. It's been sort of up and down. Defensives, healthcare has done, continues to do quite well. So, it's sort of its characteristics, the ones that it used to be criticised for, as being unexciting blue chips, have actually helped it out a great deal over the last couple of years.
This is the FTSE 250. That's down by 25% since the high, and that's 763 days ago. Now, the real car crash, of course, is the AIM all share. Look at that. It's actually down. What is it down? Now down 40-odd%. 44% from the high 756 days ago. So this is why I'm quite. But I mean, if you look at the steepness of that chart, it's leveled off. Let's look at some comments. First and foremost, someone said we're looking at XP, one of the biggest fallers today, and Horizonte Minerals. So they're in the doghouse, those two. I'm looking for a nice phrase rather than rises or fallers. What can we have in the doghouse? Best of class today, something like that. But they are in the doghouse, Horizonte and XP Factory. Look at that. But some comments. Simon said, market timing, caution still needed in my view. The yield curve inversion is now 15 months and still 0.5% or minus 0.5 inverted. The average time for interest rates to fall after a pause is around about 8 months. If the market knows that, though, the market's, if you look at just the example of the AIM share, it's dropped off for 2 years, and we haven't had an official announcement of a recession. So it's pricing that in.
I think we give the market a bit too much credit for what it apparently knows.
Oh yeah. But it can't. It'll try and price in. It'll try and price in what it can. Can't if you're driving on the road there and you can't see a crash happening up ahead because it's a bit foggy and misty, you're likely to crash. But if the fog and mist lifts a bit, you can sort of see what's going on. You just slow it down a bit.
Yeah.
So
I tend to agree. I tend to agree with Simon here. This is we're in a sticky spot economically, and yes, ultimately this bad economic news suggests that the medicine is working and that there will be a shift in policy at some point down the road. But we've still got some tremendously awful economic news coming out, and I think XP Factory is an example of
XP Factory.
How much that economic news has not been priced in.
XP Factory.
XP Factory. Sorry, XP Power. That's what I'm unfortunately shared.
No, but that's China. I know there's lots of complexities, but Simon says we are therefore around about 12 months from the bottom, in my view. What? Simon, look at history. We've never had a bear market as long as that. Simon
he is looking at history. Well, it doesn't matter, but I see again. The past can guide what we think, but it isn't a definitive roadmap to where we may be going, and things, are slightly different this time. There is so much debt washing around the system.
Yeah, there is.
That wasn't there before, and so few levers that policymakers have to pull.
Yeah, but that'll be cured by reducing of interest rates. He says, and so the UK markets will not bottom until the US has, and that hasn't even got a bear market yet. Yes, they were in a bear market, but they've rallied out of that.
Yeah, they've bounced back out. But their bounce was this was driven.
Yeah,
this to me is just. This is people hunting those quick gains, and we know what drove that. It was people getting very excited about AI, and yes, Nvidia is the big driver of a lot of the US market throughout this period. And its shares quadrupled. And there's a lot of AI infrastructure to be built out, but we're not really seeing the true benefits of AI revenues coming through. I think the market has got ahead of itself again, and it's sort of retreated from peaking.
Well, the AIM share hasn't. I mean, NASDAQ and the S&P has. Yeah. So you've got some strange dynamics at work here. People are, I think, are desperate to find those positive returns, but the reality is that things are very, very tough out there, and AI is a game changer, and it will change the entire nature of the world, and it will underpin long-term equity returns as companies use it to increase productivity in the years ahead. But right now we've got to work out how to use it. We've got a few years of working out how to restore some stability to the financial system, and we're not there. And Simon refers to a book, The End of Everything Bubble, and that's exactly what we've had: cheap money driving the price of everything up, and it's got to deflate, and it could deflate more slowly than history would suggest. So this is the S&P, right? And this is where it came down to. It did go 27% down between from January 22 to October 22. But look at these levels I put here going back since 1929. Okay, these are the averages. This is average bear market without recession. That's for 12 months, and it should have come down to this level. It hasn't. Okay,
but there's still every possibility that the US could slip into recession.
Yeah, I think they will. I mean, these constrictions central banks are putting on the economies take a while to kick in, a long time to kick in. Like I said, you go back 18 months, it only just started hiking interest rates. So the full effect of these interest rates. But when they see because we're already seeing negative figures coming out, contraction like in the PMIs. When they see the actual massive effect that's happening, they'll ease up. They'll have to, because they're going to create every single economy otherwise, and that's what they have to do. So
unfortunately, I think no amount of easing up or anything else will fix what's going on in China.
No, that's a car crash.
It's a car crash, but it's a car crash, in the second biggest economy in the world, and one which will send, I would say, more than ripples.
Yeah,
around the world. And XP Power today, is a fine example of the dangers lurking there.
It's the most followed company on Vox. It's also the biggest loser, right? Or one of the XP. They are the two biggest losers, right? Are the most followed. This suggests to me people are jumping in for a catch and falling knife trade. Be careful when you do that. it doesn't play out very often, very well, and so be careful. So XP, what's happened? Let's have a look at the news then, John. And they start off
it's awful.
I mean, what do they do? XP, they sort of, what do they do? Provide sort of manufacture power controllers. There we are.
Power controls,
essential hardware.
Yeah.
Every piece of electronic electrical equipment. But this is where they start off. So they got a big exposure to China. And as we know, we were talking about this actually this morning. I was saying China now have enough empty apartments to rehouse the entire population of China and have some left over. So if you moved everyone out of their apartments, put them in the new apartments, there'd still be plenty of room. So they've overbuilt, and they're building airports, I said, that no one ever needs. It's bigger than Heathrow Airport. So I don't see how they unwind from this. The debt problem there is huge. And how do they unwind from this? It's not going to take a couple of months. It'll take a while. So it's a little bit worrying, China. But they do say here, trading over the third quarter resulted in uncertainty. The economic uncertainty in China has also led to a reduction in demand in the market. And then they talk about having net debt of 163 million net debt. That means basically, if you added all the cash up and the liabilities and all that, and then they'd have minus 163 million. That's how much they have. And yet they're 258 market cap. So that's a little bit worrying. And they talk about banking covenants, and they've spoken to their lenders to say if they're going to breach those covenants or not. So not only is it going to be weaker growth here, but their debt, is going to be hard to service. And they're asking for a bit of liquidity, a bit of maneuverability. And yet people are jumping in here.
Well, I don't think they're jumping in buying. I mean, jumping in
they
watching.
They are. Yeah.
Well, I mean, the sort of share price would suggest that most people are selling. It's down 44% today.
Yeah, but most people are selling, yes. But market makers are market down. But I mean, if you look at the volume, pretty much, you can guarantee there'll be buying and selling going on. People because it is always
the market.
I would just wait for the bounce here. I mean, you see, it's not off its low. It did go down to the low of 1260. It's now at 1340. So there's been a bit of buying in there. But so often is the case, sometimes even if you leave it 3 days, which is the magic number, leave it 3 trading days and then have a look. But even that, I think, it could prove trickier because you've got problems with trading and their debt. So to me, it's not an easy, quick trade. Sometimes when you see companies with no debt and they're a temporary blip maybe, but it doesn't happen very often. You normally get these bad news comes in threes, doesn't it? You have to wait until like the next trading update or the final results, and the trading up after that is still not going to recuperate or recover that quickly. Yeah. So be careful about these falling knife trades. They're not good. They're dangerous. They're risky, very risky.
Yeah. I'd be very, very careful with this one. The kind of applications it sells power into, the sort of higher end manufacturing, and if the UK's manufacturing figures are anything to go by, and they're reflected around the world, then that sort of manufacturing is really, really struggling.
Yeah. Germany, by the way, let's get this up. It's fun, the right thing. But Germany, I can't find it. But anyway, Germany, we are at 44. Where's our thing? So we are at 44.3. Below 50 is the Germany at 38. 38 Germany at. So they got a little bit more exposure to China because they are more of a manufacturing base there, aren't they, in Germany? We're more of a service economy. But 38, that is worrying. And so that is really contracting. So and that's the biggest economy in Europe. So yeah. It's not good.
Yeah, all very nasty.
8 Horizonte Minerals. Back in the day, I used to own a few of these. I did like where it was going. Nickel was needed for more EVs and all that stuff. But I don't know what's going on here. So if you go back to construction update, right? Back here, they said that 329 million has been spent on Araguaia construction out of the budgeted capital requirement of 537. Right? They were online to produce Q1. They're going to produce in, and now today they're saying they need 35% more, or require at least 35%, and a delay to Q3 2024. That is that they are in the doghouse. That is bad news, isn't it?
It's bad news. But again, what we've learned this year is that building a mine has become a lot more expensive. Operating a mine has become a lot more expensive. They demand huge amounts of power, huge amounts of labor.
That chart.
Huge amounts of capital equipment. And so it's become very, very expensive. We've seen this across the industry.
Have you got a question though? They were going to be in production in Q1. How is it so late in the day before they realise, oh, hang on, we're going to need an extra 200 million?
Yeah,
I mean,
that is
that now, and then production is going to be the back end of next year. We're literally 3 months away from Christmas, less than that. This time in 3 months, it'll all be over Christmas.
Yeah,
it's like, oh.
That's probably why the reaction has been so extreme. Shares down, nearly 60%, because that's a big surprise to spring on the market.
It's not a nice surprise, is it? Really?
No, it's not. Like, and as you say, it's one that perhaps they should have been cognizant before, and certainly fed the market with some sort of regular update on this, so that it didn't really catch everyone by such a surprise.
Yeah, so that's the 2nd of October. They didn't say anything passing the formal share, but they didn't say anything until August was the last sort of update, I think. But they probably mentioned it in the thing. There was nothing wrong there in the interims, which was like in August, and then all of a sudden they came up with this with 3 months to go until they start constructing it, whatever. And they say, oh, by the way, we're going to need 200 million more probably. And it's going to take a lot of time. That is a slap in the face, that.
But it is a fair old project. I mean, this is going to generate 250 million top line in 2025, according to forecasts. Although they will have somewhat changed now. But the other thing to note about mining is, there hasn't been a lot of mining capacity coming online, and there are going to be a lot of metals required for the energy transition.
Yeah.
So this is very, very nasty news. But what it's doing is something that not even a lot of the majors are trying to do, which is build new mines. So you've got to give it credit for that.
But that is, I just find that really. Listen, I don't know what I find that really poor. I mean, on just that late in the day, so they need that much more extra cash.
Yeah,
and yet and yet, of course, because the share price has dropped now. And what is it? It's a 141 million market cap. They need more than that.
Yeah, so they're going to have to dilute them to raise that money. It's going to be, I suspect, a very hugely dilutive placing. With who I don't know.
Well, debt funding probably. Hopefully, that's what they do in mind. But that's a worry.
Yeah, not nice.
No, so that's and people are jumping in on that. Gulf Keystone Petroleum are rising today because they do operate in a sort of quite risky jurisdiction. They do say here that suspension of Kurdistan crude exports following the closure of the Iraq-Turkey pipeline in March continued to delay. But apparently, I did see somewhere that this is maybe opening back up. So that's why it's rising. So that pipeline, the oil pipeline they got there. GKP. Nevertheless, longer term, it's not been a good story here. We're down from like 280 to £1, but it has a nice rally today. But one rally, a trend does not make, as they say. Nowhere. Anything caught your eye, John? News? Someone said Beeks Financial. They were followed today for some reason. They're going to bit of news out. 60 million market cap, final results.
Nice numbers.
Revenue up, yeah.
But it's basically sort of cloud-based data management for big financial services companies. I want to go away and spend a bit more time looking at it because this is sort of complicated stuff, but the numbers are really nice. So I'm going to go away and I'll come back on this one tomorrow.
So 60 million market cap, this is final results. So three times sales pretty much. What's the profit there? Operating loss. Okay, so making operating loss. Last year they made a bit of a profit. They don't know what's going on there. Let's have a quick look at their cash. Cash, they got 7.8. That's fine, isn't it? It's gone down from
decent amount of cash. I think they've got a few borrowings as well. So the net cash position is actually a little bit lower.
Yeah,
it's around. I think it's around 4 million or so. It's forecast to make pre-tax profit this year, 2023. Cash is not a worry. Top line's growing nicely. The shares aren't exactly cheap as chips, but they're not expensive for a growth stock. I just need to get my head around what it does a bit more, because, as I say, this is somewhat complicated.
Again, that's in a downtrend, and if trend is your friend, if you like it, put an alert on it, wait until it starts to get above that 50-day at least. That's Beeks. What else is followed here? Anything? So what's on the other? You've done a bit on mention. What are they doing?
Equipmake. Yeah, I mean, I've spoken about these before. I like this company. Up the road from me, on the Norfolk border. They're basically an electrification specialist for all sorts of electric vehicles, from buses to to sort of light vehicles. They've got a JV, or a partner out in India that's helping them tap into that market. But the main business is basically turning old buses into electric buses.
Oh, okay.
So it's really what this is. It's a commercial inflection point story. They've gone from being very sort of laboratory research and development based. Fair amount of grant funding in the business, which is still coming in, but the bulk of revenues are now commercial.
Yeah.
And it's basically turning let's say buses, fire engines, those sort of big vehicles that are expensive to scrap or replace. So this is a more cost-effective way for fleet owners to do that.
Someone did say it actually, because we got a bit of stories on Futura Medical, and of course,
it's a very short patent story, but it's really underpins their ability to market their treatments in Europe. So that's good news for them.
And it was a comment on these on Friday, actually. Gregory said, Futura Medical share price has been drooping, but standing up now.
Yeah, I think that's...
And of course, they do gel for erectile dysfunction. So that's Gregory's gag there.
Hey, you can't speak about that company.
We've had thoughts on Dexter says, any thoughts on Gym Group?
I don't really like it.
Why's that?
Well, I mean, I just think...
I don't like the gym.
I don't like the gym. No, I think the principle, the concept is not a poor one. Low cost, affordable gym memberships. I just think you've got some, it's not uncompetitive. We know that people are sort of worrying about subscriptions, and the gym subscription is one of those. And I think if you're rolling out gyms, it's a big old capex story. There's a lot of money that has to be spent on expansion. This isn't a sort of build once, sell many type model. You've got to build a new gym, basically.
Yeah.
So yeah, I don't fancy it.
So they're at 202 million market cap. They had their interim results out for the 6 months to end of 30th. The top line was up, of course, but the loss has gone up as well quite a bit. On these 74%. So with these, always with gyms, when you open up these things, it's always lease liabilities, of course, or maybe just debt you have to take on.
But it has to be lease liabilities because they're leasing property. That's why I say that I think that they are capex intensive companies, and where a lot of money has to be spent, it's got to come from somewhere. And if it's not sort of self-generated expansion story, which this doesn't seem to be at the moment. I it's not a market I like. I think back to the 90s, the late 90s, early 2000s, when you had a similar explosion in gyms, and it didn't end well. Yeah,
I mean, look at that there. The borrowings of 63 million non-current they are. This is less, not within the next 12 months, but nevertheless, that's lease liabilities of 320 million. So in this worry, I mean, the charts are looking too bad. It's taking a bit of a hammering. And it's come down from a long, but if you see it here, even if you look at the 200-day moving average, it's not past of that for a long time. Now it's starting to flirt with it. So, it may have ended, the downtrend may have ended, but, how big is the upside with that kind of the weight of an anchor of debt and lease liabilities around your neck?
Well, I'm looking at the share pad figures here for net borrowing. And at the end of 22, their net borrowing figure is 415 million. And a lot of that is lease based, but leases are part of the balance sheet these days. They are liabilities. And so they can't be ignored. And that was a big and important accounting change. It affected retailers and in particular, but this is in essence somebody that's using property to supply a product. And that sort of level of liability would worry me a great deal. Not one for me. And not just because I want my thought on debt is for bigger companies, a lot of bigger companies will have debt, but my thought sometimes is there's plenty of companies out there without debt, and they're good businesses. So why would you pick a company with lots of debt? And it's just an extra risk, I don't mind worry. I don't mind debt. It's fine, but I don't mind debt at all. And many sort of particularly larger companies use it very efficiently. But you have to have something that is reliable, can reliably deliver cash flows to make sure that debt is supportable. And just going back here to Gym Group, I mean, I'm looking at the end of last year. There was a cash outflow from the business, so it's got a lot of debt for its ability, vis-a-vis its ability to generate cash. That's my great concern about not just Jimbo, but any company that has a rollout like this.
Now, Proteome services, they're up 11%
Sciences.
today. How do you say it?
Proteome Sciences.
Sciences, sorry. So yeah, Sciences. Launch of single cell Proteomics. What the heck? I mean,
well,
I'll scroll down here. Let me just say one thing. Companies, please put a description always below the RNS of what your company does, because always sometimes I see companies not doing that in an quite complex area of business. I think, well, I want to know what you do. So, but they are a specialty provider of contract. I don't even know how to say that word, to enable drug discovery, development, and biomarker identification, and employs proprietary workflows for the optimum analysis of tissue cells, body. Okay, so
right. Don't ask me how the science works. This is, I haven't even got a biology GCSE.
Okay.
So this is the science bit of it is not where I'm positioned to comment, but I look at this company, I think, this is, drug discovery, anything that can accelerate and improve the drug discovery process is going to find itself in demand. And, and this is, and I think across to a company called Bioventix, which you may know. Mm-hmm. And Bioventix is essentially made its, a very, very good living out of supplying. What Bioventix does is antibodies, which are used in life sciences, in sort of drug discovery and other applications like that. So this is again, it goes back, it's that picks and shovel type idea that when it comes to life sciences, don't bet on the punt that you've got a 50-50 outcome of getting something through a clinical trial, although that is improving thanks to innovations like this and other companies and AI, exactly. Mm-hmm. But if you're going for the picks and shovels, then that's where I think the risk reward players in this sector.
Yeah, so they say where the traditional approaches can measure a few tens of proteins on each cell using antibody labeling, their version, which is SysQuant, says it can identify more than 1,000 proteins in each study of 566 cells. There we are. So where are they in their life? So they're making money then, or they make the revenue very little, I suppose. Is it?
I mean, it's fairly it's a fairly early on in the process. No, I mean turnover's 7.8 million. It's not a small company.
Really?
Yeah, turnover pre-tax profit 1.3 million. They're selling this stuff.
So 3.2, yeah, 3.2. Okay, cost sales is down a little bit, making a bit of a loss. But how much cash they got? They got cash of 3.7. That's fine.
Plenty of cash.
Hang on a sec. They got current borrowings of 10.8 million.
But they've got cash in the bank to actually, to keep things ticking over. So I kind of like this. I think it's in the area of the market that I like, and the numbers seem to be moving in the right direction.
Some chat here. Should I clear out all my blockchain investments to make space for AI? Yeah.
No.
What you want to go for is blockchain AI. That's what you want to go for. No, blockchain. I mean, I think it's a valuable technology, but how it's going to be commercialized. AI, we can see how that's going to be commercialized, and I think there are lots of companies doing it and accelerating very quickly, and it's the real deal.
I was in a fair amount of reading about AI over the weekend.
Yeah,
because that's what I like to do at the weekend. I think it's fascinating. But as I said, I think you've had that initial splurge of excitement.
Yeah.
And I think things will always moderate. There is always a sort of settling period. The big guys, Microsofts and Amazons are doing some amazing things. Developing sort of cloud-based AI tools, and it would never harm you to hold shares in those sort of companies.
No.
And they are,
but also,
they are the picks and shovels of AI, basically.
Yeah. But I mean, look at it specifically. There are companies been working in this area for a long time. I mean, like I said, Intelligent Ultrasound have been using AI now. They built up 37 million images, and they use that to their advantage. So they've been using AI for like 6 years now. And in fact, we talked about Silver Bullet recently. They've been doing it for over 6-7 years now. And they just so it's not like they've just come up with it. You see certain companies having AI strategies, but there are certain companies been doing it and using it for a long time.
I think it is a slightly different type of AI. The generative AI is what we've seen this year with Chat GPT.
Yeah, that's a different.
And it's sort of the sort of its learning ability and language ability sort of sets it apart from what we've had before, and it sort of changes many industries, particularly those that are knowledge based or process based, and so there are going to be huge productivity gains from AI across a multitude of industries. I think healthcare is the one that interests me.
Yeah. Well, there's lots of areas, right? Anything that creates lots of data that can be used, in that way. I mean, it can, transform. This is a nice one. You're going to have to change your name. Riffs off, or something. Anyway,
because you can't pronounce it.
Yeah, he says, I bought a little Spirax-Sarco this morning. Is it horribly off topic to mention a quality stock? Go on, then mention one.
Spirax is a great company.
So what do they do? Spirax.
They're pumps, industrial liquid management pumps for basically. This is an amazing company. UK.
They're a FTSE 100. They're a big company. FTSE 100. Yeah. But, so what's the SPX? Let me ask you, Risoff, what kind of return? Do you have any return in mind? What you're hoping to achieve in this company? This big rally, 2021 came off.
Well, that was the dash for quality. Yeah. So that we lots of really very, very, very good quality companies, and I'm talking things like Gaines Workshop and Spirax-Sarco, Diploma, we were talking about the other day. Saw these tremendous rallies because one, they're leaders in their field. Their expertise in what they do is really second to none globally. Secondly, there was a massive re-rating because you had this wall of money. It needed to go somewhere, and people wanted to go into the highest quality stocks they could find. And so those two factors are what we saw here. The trouble
it's gone from like £5 back in when it listed, I assume 1995, and it did hit what's that? Is that 160 or no 14 quid? Is it 9 quid? I mean, 94 quid. Yeah, 94 quid we are now.
I mean, the problem was everything got bid up to ridiculous valuations, and I will use the word ridiculous. So when we had this inflationary crisis, and obviously the effect on the future value of money, and that had a more profound effect on highly rated companies. So they've come off. Yeah. They're still not cheap, but they are one of the best. Type at what they do. There are few companies better. So I'd still be very wary on valuation grounds. But there's no doubt that Spirax and the others that I've mentioned are brilliant companies.
Yeah, it may have to go sideways for a while. But it's come down to it's retesting that almost previous low back in 2022 was 90 quid odd. I'd say that's a nice break. If £1 would be nice, but it seems like it's a bit of softening here. So
I think it might just bounce around for a bit. But I don't know what's the dividend like. I haven't looked at it, but there's no point. No harm holding it. It's an absolute cracker of a company. But it might not generate the returns that you'd hope for a little while.
No, we are. Any other news out? Have you covered anything else out today? Proteome, anything else, Johnny boy? No. AI investors said, have we covered any of these companies? KGH, RFX, DRV, PHSC, BLIN, I think they've done. BCAP, RNO, Renault. We've done it, Renault. Yeah.
Renault we did.
Chris also says, thank you as always. Good to have you both making sense of the chaos. I don't think we're making more chaotic. Thoughts on CAN? That's KAN. Medical cannabis looks good. RNS, especially on debt. Cannabis, yeah. Genuinely, I'm not over the cannabis sector. I don't understand it. I think there's lots of players in it. There's lots of regulatory hurdles there. And I just think it's an extra thing to try and learn about. Because I don't know if anyone's making any headway, are they? There's a lot of competition in that space.
I did have a quick peek. I saw that comment. I thought I'd have a quick look. I think they are making a bit of progress.
Cannabis is KNB though, isn't it? It's not KNB.
Oh no, hang on. Yeah, you're right. In which case?
Do you mean Cannabo? I mean, we've seen literally. Who was the one recently went out? MGC, MGX Pharma or MG Pharma?
MGC Pharma, yeah,
they're looking at delisting. I think I don't know. I'm not over it. I'm not expert in this field. I see there's a lot of competition in there, and I also see regulatory pressures and hurdles there. So that's why I'm not hanging around in this area, because you can have seemingly a company coming up with good operational updates, and all of a sudden the game may change due to regulatory announcements. So,
I can't see anything listed as KAN. So I'm assuming we're talking about Cannabo. But yeah, I think it is making a bit of progress, and for sure this stuff is being prescribed. It's a slightly strange process. A friend of mine has been prescribed this for quite severe nerve damage, stroke, arthritis. The prescribing process is a little odd, to say the least. So there is further to go in terms of the integration of treatments like this into the UK healthcare market, into the NHS. It's really helped. This is all about pain management, chronic pain management, and it's my friend says it's basically reset. This treatment has reset his relationship with pain, which is good. Feels much better as a result of it. And I think it sounds, reading what Cannabo are up to, they are moving in the right direction.
Yeah, some people pay for a relationship. Some people pay good money for a relationship with pain, don't they?
Well, you still have to pay for it.
In a deviant kind of way.
Anyway, so yeah, I think it's developing a digital GP service. It's developing its own products and delivery systems, which is important. So yeah, I think yes, it's been a hot market, but one perhaps worth revisiting here. I think it looks half decent.
Rob says the IFRS 16, which is what leases are called, and leases have really changed balance sheets like Gym Group, also affect the civil engineers. Also worth looking at the balance sheet changes for these types of regulation in portfolio. Yeah, but just going back to cannabis, my thought was this, right? If you can deal with the government to get some kind of regulations through, don't bother, especially this government. It's like they don't even know whether they're building HS2 from Birmingham to Manchester yet. They won't make a decision on that. And then you got Rishi Sunak on the weekend saying that, are you going to do a tax break? The best tax break we can give to people is to bring down inflation. That is not a tax break, okay? That is not tax. And in fact, you're not doing anything for inflation. All you're doing is that you're talking about it, because the Bank of England, who are independent of you, they're ratcheting up costs. So I think that's the most disingenuous answer I've ever heard from a politician. This is this is the best thing we can do for inflation. What are you doing for inflation, then, Rishi? What are you doing? What is he actually doing for inflation? I don't think he's doing anything. And then he says that's a tax break.
I mean, you've imposed the highest tax burden on the UK into living memory, and that's disinflationary.
And exactly, that's all he's doing, I suppose. He should say that. That's what he should say. We're trying to kill. We're trying to really strangle people's spending power. That's what we're trying to do. And that's my contribution to it all.
I think it was very disingenuous. I watched the interview. I almost spat my tea over the.
They've obviously thought that's a good answer, because they don't have an answer. They've obviously thought that's a good answer. The best we can do for taxpayers is bring down inflation. That is not a good answer. It's completely avoiding the answer, and it's actually misleading.
I mean, to be fair, they've obviously got lots of advisors who are helping them with their messaging. Well, no, I think that they're trying to sell a sow's ear to the electorate as a pig's silk purse, but there's not a lot of good news for them. There's not a lot of wiggle room. Like I say, they can't cut taxes. They can't do anything substantial, really, except the smallest crumbs of handouts. And yeah, I despair. Well, apparently the Conservative Party conference is a bit of a ghost town, so I think that might suggest the writing on the wall is.
Who picked that? Apparently they're in Manchester at like a former railway place, and they can't even answer the question of whether they're going to go ahead. Why did they actually pick that town? All they're going to get is questions on HS2, but that city. Someone said the good news on TAP. I have read TAP previously. I've forgotten what it's all about though. TAP's company. A regulatory crypto app bridging the gap between traditional finance and blockchain technology. I know that. Is there need to do that though? Why do we need? We've got digital money now, haven't we? I mean, I don't see any cash these days.
It is so different.
It may be bad. I understand I'm in a negative mood now because of Rishi Sunak. But it says partnership with a US-based digital infrastructure platform will enable 45 million active cryptocurrency users in the US to access TAP solutions. that's a bit overblown. That 45 million people are going to access that.
I would be more worried about regulation in this sector than any other. Than say medical cannabis, for example. We saw, I think was it last week before, there was banks stopping crypto transactions.
They got some revenue though,
Yeah.
Some of these companies don't have any revenue and they're still,
Yeah. I would worry about regulation in this space.
They got 12 new cryptocurrencies listed on the platform. I did see the take up. In fact, this is what I remember before. Their registered users, if the figures can be believed, of course, looking very good, looking very strong. I mean, registered users up 30% since listing to 144,000. That's quite a lot on an app based on Aqua stock. That's quite decent, it seems. I don't know what the loss making full year revenue 2.5. That's decent, I think, actually, for but it's a hard area.
I'm not saying there isn't some sort of genuine applications behind crypto and blockchain. It's just that I think there's a lot of risk in this sector, and I say my main risk is one of policy, one of regulation.
Yeah, I like the idea of blockchain, it's decent technology, but I just think at the moment. Because if you took Bitcoin, for example, right? First of all, it was like a store of value, but then it dropped like 72%. It's quite volatile.
That wasn't ever a store of value.
Yeah, and then there's a payment, is a currency, but you can't really because it's so volatile. And who is using it to pay for anything? So I don't know what is it now. It's just a vehicle for trading, isn't it? To be honest, it's a trading vehicle. That's what it is, to make a bit of cash in there or lose a bit of cash. That's what it is. It's got good liquidity, but that's what it is. Anything else, John? Anything else we're talking about? Oh, we missed some chat there. I don't know. I'm a bit skeptical on crypto, not blockchain, but crypto. I think a lot of it's been created from spammers, people who just want to fleece you, essentially. Okay.
No, I haven't seen much else. I know that's Bizarrian on that list. Don't know what shares. Shares down again. Actually, it's not on the website just yet, but I've just spoken to the management of Directa Plus.
Oh, okay.
Which is a graphene company that really has taken that amazing technology out of the lab and is making huge commercial strides. So yeah, that'll be up on the site later today. So worth looking out for that.
Gregory says inflation is a kind of tax. They can print and dilutes what you have. Yes, but
but you can't.
I'm saying it's not. It's not direct.
When you raise tax, we pay money to the government. That money is then invested in public services and infrastructure.
Yeah,
that is certainly not the case with inflation.
No, and they didn't even.
Yes, it feels like a tax, but it's just not a tax.
When they shouldn't, when they actually started on the program of QE, quantitative easing, they were suggesting there may be some inflationary side effects. That's what they said, maybe. So they weren't quite sure of that. So anyway, maybe US large cap applied materials. So something else. That's nice there. Result of giving Maddox too some advice on the chat there. But I think. I not just going for AI completely, just have an investment in AI for the sake of it. But I think you need to look at companies that have, decent applications that are using AI and they've been doing it for a while.
Yeah.
Not just trying to get AI exposure for the sake of it. It's like anything,
I would suggest being more mindful of companies that don't adopt AI that might find themselves disrupted.
Yeah. Good point. Yes. Just quick finish off on the old business stories. House prices fall. In fact, they didn't fall in August at all. They just stayed where they are, but they're down below. They're saying, same figures there. After a while, bad news doesn't have the same impact, and that's why markets tend to rally. After a while, because you get the initial bad news coming out as expected, and then it's not as bad as expected. Then all of a sudden, it gets a bit better, and the markets are rally. The rally before that. This is annoying. Water firms want bill rises to cut leaks and spills. So they want to raise
controversial. This. Well, we know seven.
Yeah, I'd say first of all, cut all dividends, and then if that isn't enough money, then you can raise your prices. But first of all, cut your dividends. So if you can't afford to do that without rinsing, users of it, then you shouldn't be paying dividends. That's the whole point,
Well, we talked about Severn Trent last week, which is raising $1 billion to plug its leaks. I don't know what its forecast dividend is this year. Let's have a look. Forecast dividend is its forecast dividend is going to be up. So interestingly, raising money and giving it back at the same time.
These guys, aren't they? I know. They've got one job to do. One job: service clean water and keep our bills low. Just be efficient. As I know, we're just going to pay dividend payers and carry on that way. And then we'll charge more people, and that money will probably go in dividends as well. It's like, so the more money we can get, the better for shareholders. There we are.
Large companies, managerialism will gone wrong.
Marvelous stuff. Any other things caught your mind? John. So
no,
Directa
not
Plus. Oh, by the way, I'm hopefully as well interviewing James, CEO of Trufin, this afternoon, and so hopefully that's going to go ahead. It's supposed to be this morning, but it will not. They had their final results, interim results out last week, and I think some people missed this, but their revenue. I'm looking at the revenue for H1, right? Is 8.5 million. It's still loss making, but they've got plenty of cash, and it's expected to go up to 27.6 million for the full year. That's an increase. From H1, doubling from H1 to H2, basically from 8.5 to 19 million in the second half. This is worth watching, honestly, because they are plugged into Lloyd's and all that stuff. But it's decent. It's quite several inflection points. PlayStack, the more games have been released this year, and the adoption of Sarco, the invoice lending by Lloyd's, has been rolled out to their client book, and Lloyd's, of course, is huge. So and Sage use it as well, and a Challenger Bank just come on to sign up to it as well. So I think it's a tech company worth looking at. Cool. Thanks very much, everyone. Please like, subscribe, share if you could, and we'll speak tomorrow. Cheers, Johnny.
See you later.